Hello everyone, this is Accounting Made Simple with Akeem. Today we'll be discussing disposal of shares in subsidiary. This disposal in shares of subsidiary is part of IFRS 10. So I'll be discussing in detail, and I'll be discussing in two different scenarios. When we say disposal of shares in subsidiary, this disposal can lead to two different scenarios. Number one is when we sell and we're still able to maintain control of the subsidiary. That is control to control situation. The second scenario will be when we sell shares in subsidiary and we lose control in that subsidiary. So those are the two situations we'll be discussing. So the first one is control to control situation. So this can occur in a situation where, for instance, a holding company having 80% in the stake or 75% in the stake of a subsidiary and sold part of the shares. Let's say, for instance, from the 80% or 75%, now selling 10% of it. It means the holding company still hold more than 50% in the shares of the subsidiary. That is still a control, which is still established at a control situation. So in this situation, we don't see it as a disposal. We see it as a transaction between equity shareholders. You understand? So it's reason why we don't see it that way, because we don't lose control and there's no need to recalculate goodwill. So as a result of that, there will not be any means of having to calculate profit or loss on disposal, because that investment as a subsidiary is still there. So a control to control situation will occur in so many instances. Maybe the company is trying to raise some funds, or maybe so from profitable investment opportunities, or maybe selling to other stakeholders, dilution of control, maybe to outside investors or something like that. So it can happen, and as a result, the holding company can still retain control while selling its part of the shares. So I made a very simple example here. So maybe when we look at that, we can understand what a control to control situation is and how we treat it in the books when it occurs. So the question says company A has always had 85% interest in company B since 1 January 2023, when the fair value of the net asset of company B was $2,500,000. On 31 July 2023, Company A sold 10% shares in Company B for $450,000. The profit for the period till 31st of July, I mean till the same date of sale, was 175. Show how the sale of shares will be accounted for in the consolidated financial statement. So in this instance, so what we need to know, let me just put now like we used to do solution. So that solution, um, we have the first thing we need to do is that um, um, sale sales proceed. What is the sales proceed? Is 450,000. Put it out. What is the net assets at acquisition, or maybe at the beginning, is $2.5 million. At acquisition, net asset at acquisition, yeah. Okay, let me space this. So so the next thing, is to look at um profit for the period. Profit for the period is 175,000. Yeah, that's it. Yes. So shareholding. So we'll need all this while we're trying to do our calculation. Shareholding is 85% in percentage, while NCI is 100% minus 85 in percentage. That's 15%. So in this instance, so what we'll now be looking at is, okay, what is the value of NCI at date of sales of shares? So that's what is important, because as a result of the sale of 10% of the shares, the NCI year was 15%. So when we sell 10%, it means the value of the NCI will go up by 10%, which is NCI will now be 25%. So what is the value of NCI at date of sale of shares? So NCI at acquisition, is, we know that net asset is 2.5 times NCI value, which is the 375. Then change, or let me see, NCI share of profit. So profit for the period, is 175. What is NCI share of that profit? Times NCI, which is 15%. So total value of NCI will be 401,250. So when we have 401,250, it means that the value of NCI at the date of sale is this. So on that date of sale of that shares, we now need to recalculate back to know that what interest has been added or has been reduced as a result of that 10% sale in the share. So in that case, we say NCI at disposal, fair value of NCI at disposal will now be, we know that, okay, this is the 15%. Don't let me say that. Let me say 15% here, so that we will not make a mistake. So the value of the sale will be this divided by this. We want to recalculate. What I'm trying to do is try to recalculate NCI as at the reporting date. Let me use NCI at the reporting date here. I think that's the best way to do it, at reporting date. So this is the NCI. This is the value when we recalculate the fair value of the investment. So when we now say that, okay, NCI at that reporting date will now be, is 10%. 10% stake that was sold. We now say that times, because we have grossed it up to say, okay, that's the 15%. So we now want to know the exact value of the sale. So now say 10%, which is what will increase in NCI. So this is the value of what will go up on the NCI. You understand? Because NCI has increased by this amount, and the investment was sold. 10% shares was sold for 450, and NCI has increased by this 267,500. Whereas the initial NCI value at 15% was 401,250. So when the NCI has increased by this, so the total value, I mean this is a change in NCI, sorry, change in NCI. So then what value will be the NCI to be consolidated? NCI to be consolidated will now be 401 plus that change. So the value, the new value of NCI will be 665,750, which will be in the book. So how do we now post the journal? So let me just try to post the journal. We now say when we sell, we debit bank because proceed of sale has come to the group company. So value in dollars. What is value in dollars? So we debit bank. How much was it? The question says, if you look at the question, it says 450,000. So that 450,000 is what the value of the sale is. 450,000. So that 450,000 is there. So we now say that because here we said the change in SCI at reporting date. So change in NCI at reporting date is this. So is this value that has gone over the NCI that has increased the NCI. So that value is what we now credit. Credit NCI because that value is what increased the NCI. Will be 267. Just link it. So there's a difference, which is that difference is shown on the credit side. That difference will be recorded under other component of NCI or other component of equity. So credit other component of equity. So in this instance, that difference is a. So this is not profit or loss on disposal. It's just to demonstrate what has happened. Because when you sell 10%, it means the initial 15% of NCI has increased to 25%. So the new value of NCI at 25% is this 68750. So 25%. So this is the new value. How that value has increased is this 267,500. So that is how a control to control situation is treated in consolidated financial statement. So let me now go to the second scenario. The second scenario occurs when there's a sale in the shares of or investment in subsidiary, and the sale resulted in a loss of control. So like I was explaining earlier on, I said okay, having 80% interest in another company, but in this situation we are not only selling 10% of it, we are selling substantial part, which will result to less than 50% control. You know, so when you result into less than 50% control, there could be two different situations that will have happened in that instance. No, let me say three different situations. We could have sold 100% of the shares, that is not having any investment in the subsidiary. That's one. Number two is when we sell below 50%, but the value of the investment, I mean the interest in the subsidiary is still more than 20%. That means when under IAS 28 we say when you have a significant influence, and this can be exhibited by say 20% and above but less than 50%. So when you sold interest in the subsidiary and you seem able to have significant influence by having more than 20% but less than 50%, then it means it will be treated as investment in associate under IAS 28. That is another scenario, which is the second scenario. The third scenario is when we sell and we sold less than we sold and the remaining interest is less than 20%. So that's the third scenario, but still that we have some investment which is more than zero. So it shows that we can treat that investment as ordinary investment under IFRS 9 financial instruments. So those are the situations that can arise on the loss of control. So on the loss of control, the first thing we need to do on the loss of control is we consolidate the account of the subsidiary up to the date of disposal. Up to the date of disposal. Then we now derecognize all the assets, liabilities, um, goodwill at disposal, and non-controlling interest at disposal. So those values will recognize them in the books, and as a result of that, we now recognize profit or loss on disposal. So in the consolidated financial statement, so that's how we treat it. So then, for us to recognize profit or loss on disposal, I created a simple template uh, to demonstrate how we have that loss on disposal by having this consideration on disposal of subsidiary. When you sell an investment, it's expected that a consideration will be received on the sale of that investment, so that consideration will be taken into account. um, the fair value of the remaining interest, when you sell and you still have some interest in the shares of the subsidiary, say more than 20%, like we discussed, about less than 50%, that fair value of the remaining interest, I mean maybe the equity investment that is left, that value is what is stated here. We add it together, then we take out what is left. What have we sold? You understand? What we have sold is the carrying amount of the net assets of at disposal, because there will be value of the subsidiary, I mean the net asset of the subsidiary, in the form of equity shares, retained earnings, reserves, and others. So the carrying amount that is sitting in the books of the subsidiary at the date of disposal is what we show here. While we also try to calculate. That's why I was saying that we have to recalculate the goodwill. So we have to recalculate the goodwill, because the goodwill will have had a goodwill at acquisition, but here we are supposed to recalculate the goodwill at disposal, and that goodwill at disposal is what we show under this heading here. And the last but not the least is the carrying amount of the NCI at disposal. So when we do this using this template, we'll recognize profit or loss on disposal of the subsidiary. So let's look at the scenario I did here. I mean the question I have here. Company A purchased 85% interest in Company B on January 1, 2023 for $2,800,000, when the fair value of the net asset of the company was $2,500,000. So let's put it here like we used to do our solution. So we'll now list out those things that we need for our solution. So using this same template, let me just copy and paste the template down here. Copy, paste, so that we can know what we are looking for in the question. So the first thing is consideration on disposal. So in the question, what is the consideration? Consideration. We need to look for the consideration in the question, because that's the only way we can do it. So consideration in the question says this is in fair value of interest. On 31 July 2023, Company A sold substantial part of the shares in Company B for $2 million, leaving an interest. I mean, this is an interest. Leaving a 25% interest. So the remaining interest is 25%, which means it's an associate. So that consideration that was given is $2 million. So $2 million. So the next thing is fair value of remaining shares. Fair value of remaining shares. So in this question, what is the fair value of remaining shares? So the fair value of remaining shares was also given. The fair value of the remaining 25% interest amount to $350,000. So $350,000. So we have gotten those two. So the next thing in the template says carrying amount of net asset of subsidiary at disposal. Do we have it in the question? If you don't have it, we have to calculate it, but I think we have it. The fair value of the remaining interest amount to 350,000, while the fair value of company B net asset at disposal is 2,300,000. So carrying amount of company B at disposal at disposal was also given. That is 2,300,000. So the next thing is goodwill at disposal. In the question, we did not even have the goodwill at all, but it means we would have had a goodwill at acquisition. You understand? So that goodwill at acquisition, we need to look at it and now calculate our goodwill at disposal. So how do we do that? Let me insert more. That will be part of our workings. Okay, don't worry. Let me make the workings down. Yeah, workings. 1. Goodwill at disposal. That's what we want to calculate. What is the goodwill at acquisition? We have fair value of purchase consideration. What is the fair value of purchase consideration? In the question, company A purchased 85% in company B on January 1 this. This is the fair value of the purchase consideration at acquisition. So purchase consideration at acquisition is 2,800,000. So what is the fair value of purchase? So now we have that. Then what is the fair value of NCI at acquisition? Don't forget how we used to do our goodwill on business consolidated financial statement. So fair value of NCI at acquisition, we have in the question, it says fair value of the main interest this. Okay, fair value of NCI at acquisition is 150,000. So we had that 150,000. Once we had them together, so we'll now take out fair value of NCI. Fair value of net assets of company B. B. So what is the fair value of net asset of company B? We have it already. We highlighted it out. I think fair value of the net asset of company B was 2,500,000. So that 2,500,000, 2,500,000. So this is the value of goodwill at acquisition, because that's goodwill that we need. And let's see whether there's any impairment. So impairment, adjustment. So in the question, there's nothing like that. So it's 0. So what we have at disposal is still the same, 450,000. So that is the goodwill at disposal. Goodwill at disposal. So that's, we have calculated that. So let's move forward and do others. So the second working is number 2, which is NCI at disposal, that we need in the question. So NCI at disposal, we know NCI at acquisition in the question. What is NCI at acquisition? I think it was given in the question. Purchased interest in this, fair value of non-controlled interest, substantial, fair value of remaining interest is this. Okay, fair value of NCI at acquisition is 150,000. So the same 150,000 that we have there, so just say equals to this 150,000. So has there anything changed in NCI? So NCI will change with any change in the profit or loss, or any change in the value of fair value of net asset of the subsidiary. If there's any change, so let's see if there's any change. So NCI percentage change in net asset of company B. So what is that change? Did we experience any change? Let's say what is the net asset at disposal? NA at disposal. So what is net asset at disposal? I think it was given fair value of net asset at disposal. Fair value of company B net asset at disposal is 2.3. So it's still the same this. So what is net asset? Net asset at acquisition. So net asset at acquisition is 2.5. I think it's 2.5, yeah. Is that correct? This is carrying amount of net of company B at disposal, yeah. Company B was this at acquisition. Okay, so the net asset has gone down. So company B was 2,500,000 here, but the net asset now at disposal, okay, that has gone down. So we say the change is negative, which is this minus this. So that percentage change, what is that percentage? You know that times what is the interest? The company A purchased 85%. This means 15% is NCI. So the share of the loss will now be added to this. So this is NCI at disposal. That's the second value that we need for our calculation. So now let's now start slotting everything in these templates. Okay. See, let's slot it in. What is consideration on disposal of subsidiary? We have the consideration here. Yeah, that's it. What is the fair value of the remaining interest? We have it here. When we add it together, what do we have? Then we now have carrying amount of net assets at disposal. So what is the carrying amount of net assets at disposal? This is 2.3. Goodwill at disposal, do we have it? Yes, we have it. Goodwill at disposal is this. Then we adjust, which is a negative, that is the carrying amount of net asset at disposal, is this 120. So when we sum all these three together, we now take it off. So here we now say minus sum this enter. So that's the value that we are taking out. So that value that we're taking out is 2.6. So is there a profit or loss? I think there's a loss on disposal of the subsidiary. So there's a loss of $280,000. So this loss is what we recognize in the books at disposal, while all the assets, liabilities, non-controlling interest, and goodwill will be recognized in the books. Thank you.